Hello everybody and welcome back to my channel. In this video I'm going to be sharing with you a simple pattern swing trading strategy which uses price action. So I'm going to start off sharing with you the strategy itself, the trade plan, which uses the daily time frame, which is excellent if you are stuck for time, if you cannot day trade or you cannot scalp, if you have a full-time job or different commitments. This strategy may be suitable for you. I'm going to share with you a breakdown of what it is we're looking for in a trade, and then we're going to go through some actual trade examples of the strategy as well. And for this strategy, I'm going to use the software Forex Tester 5. And that's for a variety of reasons. Forex Tester 5 is a brilliant software. It allows you to do so many things. It has lots of great features, which is brilliant for back testing, for testing out strategies, for generally practicing trading. It allows you to utilize technical analysis together with a live simulator which uses fake paper money, so it's completely risk-free, and that's why we're going to use that today. If you want to find out some more information about Forex Tester 5, I have included a link below in the description, and I've also got a link above to another video if you want some more information about the software. But first, let's just have a look at the strategy that we're going to be testing out today. So this pattern swing trading strategy, as I said before, it uses the daily time frame, and depending on what we see forming on the daily time frame, it might also use the 4-hourly time frame. The pattern we're going to be focusing on is going to be the double top or the double bottom pattern, depending on whether we are looking for a long or a short in line with the market. So what are the steps involved in the strategy? Well, using the daily time frame, we're firstly going to confirm the trend. Are we trending up? Are we trending down? Are we looking for longs? Are we looking for shorts? For this strategy, we're always going to be following the trend and going with the flow, with the current of the moving market. We're then going to mark structure and key levels on this time frame, as well as major and minor reaction legs. We're going to identify a daily candlestick at one of these levels or structural points, or using the measured reaction leg measurement, which I will talk about with you in more detail, and I have a really useful tool for doing that. Once all these points line up and we are ready for a trade entry, we just need to find the specific entry point when to get into the trade. That's when we'll be looking for the double top or the double bottom pattern on either the daily or the 4-hourly time frame. So let's have a look at a few examples here. So if we have a daily time frame that is generally trading lower down here, first things first is we're going to identify the structure. So I'm most interested in the more recent swing low, and I would simply mark that level here. And then to actually mark the length of this reaction leg measurement, I would add a little box up here, and let's just say that one would be the minor. And the same for the previous reaction leg measurement, I would add a box up here, and we'll make this one green and say that's the major. All this will be carried out on the daily time frame. So what are the entry options? Well, we've marked the structure and the key levels, the major and the minor reaction legs. Identify a daily candlestick at level structure or the measure reaction leg measurement. So this basically means that we're looking for price action to pull back to either this key level here. Option number one would be we would get a interesting candlestick at this level. So this could be a bearish engulfing. This could be a bearish pin bar, or it could be an inside candle. If you're not too sure about what those candlestick patterns are, let me know in the comments below and I can look into creating a separate video which goes into more detail on those, but I'm going to keep on topic for now with this strategy. If we got one of those candlestick patterns, that's when I would then switch to the 4-hourly time frame, which gives us more detail, it gives us more data, more candlesticks to look at, and more importantly, allows us to look and use those to find a pattern for trade entry. So that's using this first key level here. The other option would be if price action blasts past this level and returns back up to the minor level here and creates a candlestick pattern, then again, the same would apply and we would look for a trade entry. And the final option would be a measured reaction leg. What does that mean? Well, the reaction leg here that we have forming this minor structure, let's make this line blue. This is what we call the reaction leg, and all I would do is measure the reaction leg here, apply it to the low here, which actually does line up pretty much with this key level here. So it's an added confluence, and it's another way that you can measure price action and try to estimate what we think price is going to do. Before we get going with the strategy and move into Forex Tester 5, let's just have a quick look at the options for the 4 hourly. So taking the data from the daily on the left here and applying it to the 4 hourly, keeping in mind the 4 hourly would give us more information here. What I would be looking for is if price comes back up to this key level, on the 4 hourly we might see some more data. So we might see price making something like this. So this would be the double top pattern that we talked about, because we're having 2 touches at this key level. And within that pattern, we have a variety of options that we can use for trade entry. So firstly, we could get in short right there at the top of this double top pattern. That would be a more aggressive entry because price action hasn't actually started to fall back down into the trend going lower, it's just consolidating, but it is one option for a trade entry. Another option would be simply a break of the low of that double top, which is most likely going to be a market order getting short with the flow. And another option would be after the break below the neckline here, would be for price action to make a little pullback, maybe retest the neckline there. That would be an entry point, maybe a limit order, hopefully before price would then drop lower. So that's what we're going to be looking for. Let's move on to Forex Tester 5 and let's get going. So here we are in Forex Tester 5. Let's open a new project. Swing trading strategy. And let's test this out on Australian dollar USD. I've not done a lot of tests for that pair. And here is one of the brilliant features of Forex Tester 5, because you can choose your initial deposit, which is automatically set to $10,000. I'm going to keep that as that is. Right, so I've loaded some project data here for Australian dollar US dollar. So we've gone back in time using the backtesting tool on Forex Tester 5. And let's start the process that we just went through. So first things first, Forex Tester 5 have so many different tools for technical analysis. So I'm going to head over to the right hand side here to graphics, and let's just get a trend line. And I'm just going to simply mark some of the swing high and swing low points here. Graphics. And in Fibonacci tools, I'm going to use the Fibonacci extension tool just to measure the length of these reaction legs. So I want to find out which one is the biggest one. I think it's the one I've just measured. So this one here is just over half of that. That one about the same, and that one a little bit more. So let's just grab our rectangle shape. It means that this one here is our major. And it means that the most recent one here is our minor. So we have identified the trend, we are in a downtrend, we've marked the structure and the key levels, the major and the minor reaction legs. So now we just need to identify a daily candlestick at one of these structural levels or at the measured reaction leg measurement. So let's have a look at what we get. So here we have a candlestick. We have pulled back to this key level here, we've pulled back to the previous swing low, and we've got a bearish engulfing candle. Now part of me would feel like perhaps price action does need to pull back more, because as you can see, these are all quite profound pullbacks and this is just a smaller one, but let's follow the strategy that we have. And let's move to the 4 hourly time frame. So price action on the 4 hourly has actually broken this previous swing high here with no candlestick that looks like there is an entry. So it looks like price may be pushing up. Right, we've had a little retest of this key level and we've closed green bullish. So again, it looks like we're pushing up. So in this situation, I'm going to go back to the daily time frame and I'm going to move on to plan B, which would be a pullback to this minor level or a reaction leg measurement. So let's get our useful Fibonacci tool here, the Fibonacci extension, and I'm going to just measure the length of the previous reaction leg. That takes us pretty much up to the minor level anyway, so let's see what happens. There we go. big push up, and it has come pretty much up to where that reaction leg measurement is and formed a nice pin bar here on the daily. So let's move over to the 4-hourly time frame and see if we can identify a pattern. So once again, I'm just going to mark some simple price actions. So let's get the trend line and let's mark the neckline of the bodies of this candle. So price action did actually close just below the level there, but it wasn't a strong break. So I'm going to wait to see if we get a strong close below, and if we do, then I'll set a sell limit order. Right, price action is pushing up and it's broken this little high here. So I'm going to go back to the daily now and just continue to follow price in this way. So as you can see here, price has now pulled back to the full length of the previous reaction leg, which also takes it into this minor structural level here. So we've got two confluence areas of price action. We have this bearish pin bar candle that's formed on the daily. So I could get straight in there on an entry, or I could jump to the 4-hourly to try to find a pattern. Let's go into the 4-hourly time frame. And I've just moved the trend line here to mark the neck of this structural level because price pushed up, it pulled back, and it pushed up again, and it's dropping. So we've got that double top pattern here. We've broken the neckline with momentum, so it's ready for a trade entry. So I'm going to set an order here. So I'm going to use a sell limit. Let's calculate with percentage to reflect how I would actually trade. So I would risk just 1% per trade for this. I can click on this eyedropper tool to really identify where I want to get in with this. So I'm going to just set it just above where price is currently at. So that would be at 56, and a stop loss will be just above the highs here. Let's make that 96. So we are using a 40 pip stop. And I'm going to use a 2-to-1 profit loss ratio for now for this. So I'm triggered in short into this trade. So that's trade number 1. I can go into my account history here to see what happened there. So there is our trade we just took. And let's move on to trade number 2. This is quite interesting. Price pushed above this level and it's immediately pushed back down with some bearish momentum. So because we are following the overall trend, it looks like this could be a false breakout. It's pushed out and it's pushed back in. It didn't like what it was experiencing above this level and it's pushed back in. So again, this could be quite an interesting area for a potential trade short. Once again, I could look for a more specific pattern here on the 4-hourly, or I could take this as a trade on the daily. So what I'm going to do for this is I'm going to apply a trend line, just marking how price is currently trending up. And let's see if we get a break of this on the daily. If we do get a break with momentum, I may get short on a retest. Right, price has broken through there. It looks to be pulling back and retesting this level. Got some wick rejections here, and this is why it's nice to play between the daily and the 4-hourly time frame, because the 4-hour just gives you a little bit more information. You can see here on the 4-hourly time frame that price seems to be stuck underneath this level here, this trend line. So I'm going to get short here. Going to set a stop just above this level here, so we're going to use a 30 pip stop, and let's set a take profit. I'm going to target the lows down here for now. Right, let's see what happens. So right now it's set as a pending order here. Price is pushing up. Now that is a better place for entry. See how price has pulled up to where we were getting these wick rejections up to this trend line, and then we've got a really nice red pin bar candle. So I'm going to actually grab that order. I'm going to bring it up here, just making it a bit higher up. It's a better entry. My stop is in a better place there above all of this price action. So we are now triggered into this open position, once again short. And just to manage the target on this, I'm going to switch back to the daily. We are targeting the lows here. Brilliant. And again, we can go back into the account history here. So I'm going to do one more example here of trading price action in this way. So I'm just moving price on here, and we got a nice break below the lows here, which means that I'm going to just copy and drag this trend line across because this is our new swing low here. But as you can see, price is actually pushed back up with some strong bullish momentum, which to me means it is pushing up. So let's wait to see when we get some kind of resistance where we can look for a potential short. So I'm going to just tidy the charts up a bit. This length here is actually larger than that one, which means that this is now the new major. So I'm going to swap these around because I do like to use green for my major and yellow for my minor. So we broke above this key level. We're actually currently above where that reaction leg measurement was. So what we're looking at now is whether it's going to pull back up to the structural level. Alright, price is continuing to trend lower, so let's just update our technical analysis here. So we were consolidating along this key level here. We've got a couple of bounces and a break below. So let's see if we get a pullback up here for an entry short. Let's zoom in here. Looks like it could be forming an inside bar candle here. So if price breaks below this green candle, that could be a nice entry short there. So let's move to the hourly time frame to get a little bit more information here. Alright, so I don't see any pattern forming just yet. Could be forming a double top here, so I've just used the boxes to highlight the W of this double top. It doesn't always have to be perfect. It would be brilliant if price action was perfectly clear, but if it was, it would be way too easy. It just likes to keep it tricky for us. So I'm going to mark those two levels there, which I think could be the 2 points of this double top. We've got the neckline here. Let's see if we get a break below this neckline, or if price continues up. Right, that's a stronger candlestick pattern, this red one here, because it's pushed up and rejected this level. It's a nice bearish pin bar. In fact, I could take a more aggressive entry there now for a short. So let's set a sell stop just below price at 65. I'm going to set a stop at 05, 40 pip stop. And for now, let's just set a target down here. So we've got a 2-to-1 profit loss ratio. Right, so we're triggered into this short. I would ordinarily want to target a break of the swing low, but we had this consolidation that price broke above, so I'm going to see what happens, because it might be that price comes to this area, builds something and uses it as a reversal to make a deeper pullback. Right, it's a nice strong candle down. Let's just extend this. And it can be useful to flick between the two because the 4 hour does give you more information. So as you know, I was originally targeting down here for a target. I'm going to use that area now to just trail my stop. So I could trail a tight stop here at 85, which was my original target. So now I have a 2R profit stop in place. Going to see if price will allow me to get a little bit more down here. Oh. Ah. All right, well, I tried a. What would price have done? Ah, see. Too tight of a profit stop. If I'd have gone to break even, I probably would have made some more money, but that's the beauty of backtesting. You try out these methods, you try out these strategies, these different ways of managing trades, and you learn. You learn and you gain valuable experience, and that is, in my opinion, the key to really making it as a trader, is to never give up learning and gaining experience. And that's what makes this platform a really useful tool to add to the trading toolbox, because it has all these great features, as you can see, that I've just used with you. It allows you to trade and allows you to analyze your progress, and it's all risk-free, so it doesn't use real money. So it's brilliant if you are a beginner trader, if you want to learn how to trade but you don't want to lose money. This is the tool that will help you do that. Or it's also brilliant for if you've been trading a while, if you're a profitable trader, because like this, you can try out new strategies, you can just practice existing strategies. It's just a brilliant tool either way. So if you want to have a go for yourself, like I said, there's a link below in the description. Meanwhile, if you've enjoyed the video, please do drop me a like and don't forget to subscribe if you're not already part of the channel. I hope you've enjoyed this video and I will catch you in my next one. Thank you for watching. Bye.